Hello everyone, and welcome back to World Finance Update. I'm really glad you're here today. After the sharp and very painful correction we saw earlier this week, gold has come roaring back. Today, the yellow metal has broken decisively above the $5,000 psychological level once again. Spot gold and futures prices are trading in the $5,034 to $5,083 range, with gains of 2% to more than 3% in most sessions. At the same time, the U.S. dollar index is showing resilience, holding steady around 97.40 to 97.55. In today's full update, we are going to cover everything step by step. What exactly triggered this strong rebound, the technical levels that matter right now, why the dollar is not giving up much ground, the bigger macro and geopolitical picture, and, most importantly, what smart money is likely doing and what you should be watching this week. So, let's dive right in. First, let's talk about gold and why it has bounced so aggressively today. Just a couple of days ago, we saw gold dip toward $4,650 to $4,700, a level that many traders were watching closely. That zone acted as a very strong magnet for buyers. Once prices reached there, we got heavy bargain hunting from both retail and institutional accounts, massive short covering. A lot of traders had built large short positions during the sell-off and now had to buy back. A classic oversold bounce after one of the fastest corrections from the recent highs. Renewed safe haven interest because geopolitical headlines haven't gone away. And a modest pause in dollar strength, which gave gold some breathing room. This combination created a powerful short squeeze and dip buying wave. It's a textbook example of how violent corrections in bull markets are often followed by equally violent recoveries. Now, let's look at the technical setup on gold. This is critical right now. Support levels that worked. $4,650 to $4,700. This zone held very well and became the launch pad for today's rally. $4,800 to $4,850 acted as intermediate support during the recovery. Current resistance levels to watch closely. $5,000, huge psychological round number, reclaimed today with strength. $5,050 to $5,100, next immediate resistance cluster, previous highs and consolidation area. $5,150 to $5,200, stronger resistance zone. If we get there this week, it would be very bullish. 5,300 plus would signal resumption of the larger uptrend if cleared. What really matters now, can gold close the day and the week above $5,000 with conviction? If yes, the correction probably ends here and we look higher. If it fails to hold $5,000 on any pullback and drops back below $4,950 to $4,980, then the risk of retesting $4,800 or even lower increases again. Volatility is still very high, so tight risk management is essential. Let's switch to the U.S. dollar index. The DXY is trading in a very tight range today, around $97.40 to $97.55. It's basically flat to slightly up, no major weakness and no breakout higher either. Why is the dollar holding firm despite gold's big rebound? Several reasons. The recent bounce from lower levels, mid-96s, has left the dollar less oversold. Ongoing uncertainty from the partial government shutdown, many key economic releases are delayed, so markets are in wait-and-see mode. Hawkish undertones around Fed policy and the next chair nomination are still supporting the dollar narrative. Short-term safe haven flows in certain risk-off moments still favor the dollar. Rate cut expectations for 2026 remain modest, not aggressive enough to cause a dollar collapse. Key DXY levels this week. Support, $97.20 to $97.30, minor support, $96.80 to $97, stronger technical floor. Resistance, $97.60 to $97.80, recent swing high area. $98, very important psychological and technical level. $98.50, next major zone if we get a real breakout. If DXY closes above 98.00 with volume, it would put fresh pressure on gold and most commodities. On the other hand, a break below $97.20 would give gold and silver even more room to run. Bigger macro picture, why this back and forth matters. Gold remains in a long-term bull market. The drivers are still very much in place. Central banks around the world continue to add gold reserves. Geopolitical tensions, Middle East, trade conflicts, global uncertainty are not resolving. Debt levels globally are still climbing. Inflation expectations have not collapsed. They remain sticky. The recent correction was sharp and painful, but it looks more like a healthy reset after a very extended rally, rather than the end of the trend. Institutions and smart money likely behaved in two ways during the dip. Some reduced exposure or hedged to protect profits. Others used the weakness to add to long positions at better prices. Right now, many are probably leaning long again after today's strong move. What to watch closely over the next few days? Gold's ability to defend $5,000 and push toward $5,100 plus. DXY reaction at 97.80 to 98.00, breakout or rejection. Any news on the government shutdown, data delays are creating uncertainty. Broader market risk sentiment, how equities, bond yields, and oil behave. Geopolitical headlines, any escalation can flip the script very quickly. That's the complete update for today. If this detailed breakdown helped you, please hit the like button. It really supports the channel. Subscribe to World Finance Update and turn on notifications so you get these daily gold and dollar updates first thing. In the comments, tell me, do you think gold holds above $5,000 this week and goes higher, or do we see more volatility and chop? I read and reply to as many comments as possible. Thank you so much for watching. I'll see you in the next update. Take care.